Capital gains tax is a tax on the profit or gain made when you sell or dispose of an asset. And in the UK, this tax is applicable to property sales as well. Here are some important things that you need to know about capital gains tax on property sales. The rates of capital gains tax for property sales depends on whether you're a basic rate taxpayer, and if you are, the rate is currently 18%. For higher rate taxpayers, the rate is 28%. And in the 23-24, you can make tax-free capital gains of up to £6,000, which is down from £12,300 in 22-23 tax year. The allowance is due to be cut further in the tax year 2024-25, so you can make just £3,000 in capital gains tax-free. Couples who jointly own assets can combine this allowance in the 23-24 tax year, potentially allowing a gain of £12,000 without paying any tax. Now, your main residence is exempt from capital gains tax. To calculate the capital gains tax on your property sale, you need to know the following. As the name suggests, capital gains tax is only charged on the gain that you make, the profit, rather than the full amount that you sell the property for. To work out your gain, you can deduct the amount that you originally paid for the property from the price that you sell it for. You can also deduct any legitimate costs involved with buying and selling the property. This includes things like estate agent fees, stamp duty, maybe some improvements that you made to the property that you made whilst you owned it. You can also offset losses that you've made when maybe selling other assets. So maybe on another asset you had a loss, you can carry that forward to the gain that you were chargeable for when you sell the property. Or you could have maybe several properties and you sell one with a £40,000 loss, and then you can carry that forward against the sale of a further property. And of course that'll reduce your overall capital gains tax bill. Once you've got those numbers, you can use them to calculate the gain and apply the appropriate rate of capital gains tax. So this is how that works. You'll need to multiply the gain by the appropriate capital gain tax rate to get the tax owed. You must pay the tax owed within 60 days of the completion of the sale or disposal of the property. And you'll do this by submitting a residential property return to HMRC and making a payment on account. So coming back to the rate of capital gains tax you're going to pay depends upon your other income. So for example, let's say your income is £25,000 a year and you make a property sale gain of £95,000 after the legitimate costs. You would then deduct your £6,000 annual exemption allowance, making a taxable gain of £89,000. This means you pay 18% basic rate capital gains tax on £25,270 of your gain, which would then take you up to the £50,270 higher rate threshold. Therefore, your tax bill would be £4,548.60. That's the 18%. Then you've got to work out how much you've got to pay at the higher rate of 28%. So that would be the remaining £63,730. And that'll be at the 28%, which is £17,844.40. So your total bill will be £22,393. Capital gains tax can be complex and there's various rates and exemptions to consider. So take advice around this. Speak to an accountant or a tax expert to give you proper advice around paying that tax. I hope that's been useful. My name's Justin King. I'm a chartered and certified financial planner. My aim is to help you live a successful life. I host a podcast called the Retirement Cafe Podcast. I'll put a link in the description below. You might like to tune into that. For now, I'm Justin King, helping you live your best life.